there other trends you're seeing that are exciting, or that as a young CEO or a CEO I should be thinking about?
I think you should be aware of something. I'd like to talk about part of a liability policy, a product's liability policy, another section of it that's called advertising liability. Now, most people, when they see that on the policy, think, oh, this is great. I've got my liability policy and I have advertising liability in there, and if the FDA comes down to me or I get sued on a class action lawsuit for my claim or my product, made a false claim, etc., I'll be covered by that. Unfortunately, that's absolutely not true. And of course, we've seen in just the last few weeks several claims, the airborne thing, several issues with false advertising. And it appears very strongly the FDA and the FTC is going to get harder and harder at enforcing those types of issues. I think Rite Aid got stung just last week, and not covered by insurance. But because that advertising injury is in the policy, so many people are led to believe that it is.
So what does that mean in the policy when it says advertising?
Without going into too much detail, it's the coverage is about this. It's very narrow as to be almost non-existent. Now there is separate coverage called advertisers liability, advertising liability, I think it is. It's a separate policy, and it will cover certain torts involving your advertising activities, but it won't cover false advertising. There's no insurance for that. People need to really understand that.
Wow, that's huge, especially if you're a dietary supplement company that's making claims in their advertising with a certain level of science. As we all know, the science is subjective,
yes,
to a large degree. So, making sure you cover your risk on that side of it is a big deal.
I've actually tried to get an insurance company interested in doing that, and they just wouldn't touch it. It's too volatile. I mean, look, Airborne went from, seemingly a very successful company to a $23 million class action settlement on that issue.
So it might be difficult to get that coverage.
It's impossible. It doesn't exist. I tried to create it, but I couldn't get anybody interested.
So another reason to get your science house in order,
yes,
and really button down your product development life cycle, and make sure that you've got a depth of knowledge on your product that's untouchable.
And be careful of the claims you're making. There's boundaries to that, as we all know.
Right, structure, function, and there's a lot of lessons we could talk about on that one all day long. Good. And so we talked about the increased possibility of product recall and the strength that the FDA may have going forward. I think that's great. And then this whole concept of really understanding what your advertising liability line item on your coverage is.
Or is not.
And recognizing that you might not be covered where you think you are.
Right.
Excellent. Great points. Let me shift gears a little bit. What do you, if you've got an open forum to talk to CEOs, what are the watch outs you want to tell them about? You and I were talking the other day, and you mentioned a CEO that's getting complacent because our industry is in a time where there's not a lot going on from a lawsuit recall type of a situation. But what are the watch outs you would tell the CEOs out there? You might want to think about this, you might want to think about that. What advice would you give to CEOs with an open forum?
Well, again, as you said, in this industry, most of my clients have never had a claim. But so it's never going to happen to me syndrome,
right. But
it does happen. We read about it every day. So if you're in a position where right now you're starting up, or you're in a position where you don't have to buy insurance right now, product liability insurance in particular, you should consider it. The other thing that just occurred to me, as shifting gears over to inventory and fire insurance that companies have to have, a lot of people believe that their fulfillment house or their consignment house is insuring their product while it's sitting there waiting to be sold and shipped. It's not true. So many people say, well, they're insuring it over there, aren't they? No, they're not. And the rule on this is very simple. Always insure your own stuff wherever it is, because nobody else is.
What about Bailey agreements? And
those exist, but they're few and far between.
Okay.
Most people get complacent and they just think, well, I'm doing business with this fellow over here. He's got my finished product, and it's a couple $100,000, whatever it is. And certainly he's insuring it because it's in his building. He's not.
Right.
That's the rule. There's exceptions to every rule, but that's generally the rule.
Well, that was the big deal when I was running an ingredient company. I mean, we were shipping in 20 containers of organic soy and sitting at the port of Oakland or whatever, and we were, mandating Bailey agreements before we'd ever bring it in.
Mm-hmm.
So you've got to be really diligent
yes.
about that.
Yeah.
But I completely get where people will be totally complacent on that side of things.
And the same is true with raw materials. A lot of people have raw materials stored at their contract manufacturer's location, and they think, oh, certainly my contract manufacturer's insuring that. They're not. And they always find out after the smoke is out and the fire's out.
Exactly.
That's the sad way
we
to
ran into
learn.
a couple of suppliers just last year that burned down to the ground. And, So it happens. Good. What other watch-outs? Don't be complacent. Think about your partners. Really manage the risk. Really think about that. Anything else?
Well, at the risk of being a little bit self-serving, I've been doing this for 8 or 9 years, and I wrote my first article about this, which is to pick a insurance broker that understands this industry.
Absolutely.
Because one that doesn't is not going to be able to go to those underwriters we talked about earlier and explain all of the good things as a company you're doing to be a better risk. We're in a phase right now of the insurance market where it's been going down. The entire commercial insurance market, exclusive of employee benefits, medical insurance, has been in steep decline for 3 to 4 years. And there are a lot of, frankly, desperate brokers out there trying to maintain their revenue. And a lot of them are just simply not informed, really not very qualified to take a dietary supplement company to the insurance market because they don't know what the issues are.
Right.
They'll whisper in your ear that they'll get a cheaper price, but anybody today can get a cheaper price because the market's going down. When the going gets tough, and eventually this market will go back up again, it always does, that's when you want to have a broker that is knowledge and experience and can tell your story to the right people.
Right. Uses the right terminology and,
Yeah.
and can bridge the gap between insurance speak and dietary supplement or natural product speak.
Yeah, because when the insurance market starts to go back up, the harder risks, the perceived harder risks, and supplements is one of those, are the first to go up. And they go up rapidly. And it'll happen sooner or later.
Yeah. Everything's cyclical.
Very much.
And so, for good companies that are trying to do it right, I mentioned product development process and science and being able to go to the, 6-inch binder and pull it out and flip to the science and back it and that kind of thing. What else might I do to appeal or to set myself up for success with the underwriter? Are there other things I might be doing as a CEO that really shows the underwriter that I'm committed to doing it right? What makes it easier for you to sell the company to the underwriter?
I believe in addition to the science and those technical things, I believe it's something you mentioned earlier, which is being a visible, good citizen in the industry, belong to associations, maybe be active in those, come to events like this and be active and well known. Just be out there because there's thousands of companies that aren't at this event, that don't go to trade shows, and some of them obviously are at the bottom end of our industry.
They're the ones that make us look bad.
Yeah, but the sad thing is that it's hard for an underwriter to tell one of those companies I just described that's kind of a bottom feeder from the great companies, for example, that are here.
Right.
Companies, consultants, and other people. So it's just being a good citizen in your industry, I think, is what it amounts to.
Excellent. What should my expectations be with my broker? I use an example with my financial advisor where I meet with him once a year, and then I meet another financial advisor who says, that's not a good expectation. You should be meeting once every 3 months. What should I be expecting from my broker in terms of communication or meetings?
Well, first of all, trust your common sense. If you sit down with a broker and he impresses you with his knowledge of your industry, what you do, the very technical aspects of it. If he shows up at events like this and really mingles with the people that are leaders of the industry, let your common sense tell you this is probably the guy I want as my broker. Because as we're sitting here, some other person will come in a month later and say, I know a few things and I can do it for 10% less. Do you want to pay 10% less, or do you want to go with a trusted advisor that really understands this industry? So again, I would say follow your common sense.
That's great advice. And also, just as a note on Greg, you've connected me with so many different people. I mean, because you're deep in the industry, it's a small industry. And being able to know other players who are expert in X, Y, and Z and make that recommendation goes a long way. So I would just give you a plug on that.
Thank you.
Very, very good.
And it's a lot of fun.
Absolutely.